There's a very reasonable probability that silver prices hit $100 next year. So if you buy it at 61, that's not that bad. If I'm right, it's going to 100 next year, and that's not going to be the top. So you can buy some physical gold and silver at it's going to lead to higher long-term interest rates, higher inflation. It's one of the reasons I think that gold and silver are making the moves that they are. For gold, I think 5,000 is kind of a, minimal target. We should get $6,000 gold sometime in 2026.
Economist Peter Schiff predicts $100 silver and $6,000 gold in 2026, citing the Fed's return to QE, disguised as reserve management purchases, as key inflation fuel. He argues the Fed has lost independence, becoming a political tool that will destroy dollar confidence and trigger a sovereign debt crisis. Schiff details a historic physical silver squeeze with $50 as a permanent floor. He also responded to President Trump's personal attack after criticizing the cost of living crisis, stating the administration is gaslighting Americans about inflation. Schiff calls AI, stocks, and crypto bubbles, but says gold, silver miners have much further to run as mainstream media ignores the metals rally. Subscribe to Fine Metals for future updates.
This is when gold is up like $60, silver's, still at record territory, up above 54.30 or something, or 64.30. And as they're going into a break, they say, "Oh, let's take a look at the markets. Oh, the NASDAQ," and they talked about the NASDAQ. "Let's look at Bitcoin." And that was it. They didn't even bother with the precious metals. And in fact, I was watching yesterday, and they said, coming up, we're going to talk about Bitcoin and whether or not we're going to see a rebound next year. But they hadn't even mentioned gold or silver yet, because I was waiting for that. And gold and silver, they don't have to talk about a rebound. We're at record highs. So they're not even barely reporting on it. Yeah, once in a while they do mention a gold or silver stock, but they don't really encourage anybody to buy into it. They just kind of mention that it's gone up. They're still trying to, direct their audience to Bitcoin. Both metals are going a lot higher, because I do think that we're going to have a U.S. dollar and a sovereign debt crisis. I think pretty much everything is in a bubble because of the Fed. I mean, the bond market's a bubble, the stock market, the housing market, crypto. I mean, that's why housing is unaffordable, because the Fed inflated a bubble with, 0% interest rates and, buying mortgage-backed securities. I think the bigger risk is missing out on the rest of this bull market, which is going to last for quite some time. So, yeah, I mean, and I also think that the risk is going to be that there are going to be a lot of people that are going to take profits too soon. They're going to say, "Oh, I've doubled my money, or I've tripled my money. Let me get out." And, look, selling taking some of your profits off the table, I suppose I can't necessarily argue with that as a risk management strategy. But I think that we have a long way to go. And so I think that, people that think, okay, it's time to cash out and look for something else, I think that that's going to be the mistake that people make, thinking that it's a top, thinking that, they've made enough money and they want to get out. Because I think we're starting from such a low level. Even if, the stocks double or triple, you got to look at where they moved from, and where they, how low they actually were, relative to, past, and where they're likely to go. Because I think earnings are going to explode for these companies. And so I think the valuations, are way too low, that the market is not factoring in and crediting these companies for what they're likely to earn in the future. I mean, I've often said that it was just a pretense that the Fed was independent, that it was very much political. But we're going to be dropping that pretense. And, of course, if the Fed chairmen are there to do the bidding of the president, well, then that applies to future presidents, too. It's not obviously just Donald Trump, although the person that Trump puts at the Fed will be there after Trump finishes his term. So in theory, if a Democrat comes in, the question is, will Trump's guy or gal, but it looks like it's a guy, but will Trump's guy be just as loyal to the next president. I don't think it's going to be J.D. Vance. I think it's going to be a Democrat who's going to be the next Fed chairman. So will they have to wait until this term is up to put, their rubber stamp puppet in there? It's just going to add more inflation into the economy. I mean, I think the last few times the Fed did quantitative easing, they got a bigger boost to consumer spending and to asset prices. I don't think they're going to have the same type of luck this time. I think that when you're cutting rates and creating more inflation, when your inflation that you already have is well above your so-called 2% target, I don't think the markets are going to react as favorably in the short run this time as they did the last couple of times. I also don't think that you have foreigners, foreign central banks who are willing to, go along with this as far as buying more treasuries and propping up our bond prices and propping up the dollar. So I think that it's going to be a very different reaction. And rather than stimulating the economy, they may end up sedating it because this policy could backfire and cause long-term interest rates to rise, as well as consumer prices, which are already rising. People are already complaining about the affordability crisis. I don't expect there to be that big a decline because I don't think the markets are going to make it that easy for people to buy because I think prices are still much too low. And I think at this point, you have a lot of investors who want to get into this market. And so there's too much buying beneath the market for the market to correct that substantially. I think there will be sharp sell-offs to kind of get the day traders who are trying to be cute and just maybe come into the market with some leverage positions intraday. I think, they still have to have risk there. It can't be just like one-sided, can't lose. So keeping the speculators honest, I think you're going to see plenty of sharp declines like we had today, but not major declines. So I think you've really got to get into this market to the extent that we do see sell-offs. I expect them to bounce back very quickly. So clearly, the truth has got nothing to do with what you post on Truth Social. They may as well rename it Lie Social because I told the truth, and that, caused the president to have a meltdown. I think what he really didn't like was that I was telling the truth on Fox News. He probably wouldn't have cared if it was on, CNN or MSNBC or CBS or something, because Trump supporters don't watch those networks. But what he didn't like is that I'm telling his loyal followers, who religiously watch Fox News, he doesn't want those guys getting the truth. He wants them to be brainwashed by a parade of, pro-Trump propaganda that's being disseminated through Fox News. Because I watch Fox News. I mean, 90+% of the people just praise Trump and how great he is and how great the economy is. Yet one guy comes on and says that's not the case. And, he goes ballistic, even though it was like 6 a.m. Who the hell was awake? Especially like on the West Coast, it's 3 a.m. I mean, only in the East Coast. But no, Donald Trump is wide awake in bed in the White House. I assume he was still in bed. And he's watching Fox News. And, probably when I came on, he probably thought, oh, here's another guy that's going to talk about how great but the economy is and everything. Probably extremely excessive. I have no idea, how AI is ultimately going to be distributed. And in general, the benefits should not necessarily just be to the companies that are, spending all this money building out data centers. It should be to the individuals and the businesses that are able to utilize it in such a way that they become more productive. But who knows? I mean, a lot of this spending may end up being a waste. I don't know. I mean, we don't know, how things might be improved, what we're preparing for. Will we actually need all the data centers that they think we need? Maybe we won't. Maybe we'll be able to, maybe it'll be more efficient than we think. I have no idea. But right now you have companies being rewarded in the market simply because they're spending money and they're spending a ton of money. And a lot of these companies are now spending money, investing in each other and then paying the money right back. Like there was just, there was just a deal today or yesterday, Disney made a deal with ChatGPT where ChatGPT is going to start paying Disney a bunch of money, but they're getting the money from Disney because Disney's making a big investment in ChatGPT. And then they're just going to spend some of that money licensing Disney's products. But I mean, all this is just like money just going back and forth like a shell game. But I think it does have profound implications because one of the resources that we have that limits abundance is labor, right? There's only so many people that can perform so many hours of labor. And some of it is mental labor, right? Not just all physical, it's thinking, right? Tasks require a cognitive ability, an ability to reason, right? Not just, brute strength. But with AI and the ability to not only have AI, just existing in cyberspace, but existing within, robots, right? Because we're working on robotics and we're working on AI. We have the potential to vastly expand resources for labor, and to the extent that we could mass produce enough intelligent robots and other artificial intelligence so that AI could do all the work that we're doing now. Well, that's great for humanity. That was a big part of his campaign to allow freedom of speech because the Democrats were, clamping down on that and trying to punish people for saying things that, weren't supported by their woke agenda, deplatforming people. And he was very much against that. And I agreed and I supported his stance to protect the First Amendment. But somehow, if he doesn't believe that I should be able to say something negative about the economy, that would be very hypocritical of him. But we'll see. Because I don't do that particular show that often, Fox and Friends, but I had done it like a week or two earlier, and it wasn't like they didn't know what I was going to say. I mean, they asked for my position even before the segment. That was a day before. And I told them, yeah, I think inflation is getting worse. I think Trump's policies are inflationary. He's not bringing the cost down. But it's crazy, too, that not only did he say that I was wrong about prices going up, he said they're going down. He didn't say they're just going down. He said they're going substantially down. I mean, I don't know any prices that are going down, let alone substantially down, other than gas. I mean, yes, oil prices, gas prices have come down. I just don't believe that that's sustainable. I think that that's a temporary relief that we're getting. Bitcoin is going to move on the rate cuts and the return to QE. Why isn't it moving now? Right? I mean, it doesn't make any sense that it just waits for gold to stop going up and then Bitcoin all of a sudden magically starts going up. It doesn't make any sense that would happen. Maybe that happened a few times in the past, but that might be more of a coincidence than anything else. I don't think it's a foregone conclusion that every time gold goes up, Bitcoin must go up later and must go up more. I think it could just come crashing down. In fact, the fact that it's not rallying is a good sign that it's about to go way down.